So guys, every trader has a certain style of trading, right? Some people like to take directional trades. Some people like to take non-directional trades. Some people like to chase momentum. Some people like to do mean reversion. So there are different ways in which people trade. And as far as I'm concerned, I basically do everything. But one of the common things among all of them is that I need to have a certain level of confidence about the texture of the market. And when I say texture, I mean the direction, right? So when the market is bullish or the market is bearish, whatever it is, if there is a reasonable level of confidence that yeah, the market has a certain texture, then it makes it very easy for me to plan for the different scenarios and plan for different ways, different strategies, what would be the perfect fit for that day. But now that market has gone into this very strange sort of a consolidation slash just range bound behavior which the market has been displaying for over a month now, it has almost become impossible to sense what this market is planning to do. And if you're looking at the screen right now, it's a perfect example of what I mean. That take a look at this, right? I mean, this is how Bank Nifty has moved throughout the day. There is no rhyme or reason of what why it did that. And I mean, this is just plain nasty randomness or noise. Now this is not something new which is happening for the first time. It has been happening from the past 1 month. So what happens is that on days like this, I at the beginning itself, knowing that market has been behaving this way, I have to make a decision that what is that I want to do. Will I be trading first of all? And if I'm trading, then with what position size? So Thursdays I normally like to trade because of expiry effect, but the position size is something which I always pay more attention to. And one of the things that I have done in the past week or so is that realize that this market has become so much unpredictable as far as I'm concerned that I cannot deploy more capital in this market, right? Because you have no idea what the market will do, right? I mean, just even this morning when the Nifty Bank picked up, people might have even created long positions because this was a big move. All of a sudden, then everything got reversed, and then again it went back to this choppy behavior. So this is noise. Now the good thing is that today, for traders who went with a bigger volume, they of course got lucky very well, because market did not make a giant move like it did last week. Right? So last Thursday was the magnitude of the move was very big, which creates a stop loss hunting. Today, not so much, right? So this is an ideal kind of market for option sellers. Option buyers, not so much. Option sellers, yes, because magnitude was not that big. So you sell call options, you sell put option, you end up making money on both sides. Now, did I know this before the beginning of the day? No, I had no idea, right? Nobody can tell how the day will pan out, but you do know that there is no directional bias in this market, so it's going to be choppy. So what I did was, and what I'm going to continue to do, is keep my position sizes small till the market picks a direction. So on the downside, about 17,850 thereabouts, and on the upside, 18,250 thereabouts. Once the market picks a direction, either upside or downside, it will become easy for me to deploy more and more capital. So I kept it small today so that I don't have to deal with all the stress and anxiety and all those things. So kept it light. Basically from Bank Nifty, I started exiting in the around noon, around 1 o'clock. And Nifty position size, some of them I carried a little bit longer, but position sizes were very low. Both of them made some money. Nifty made about 17,000. Bank Nifty made about 40. So it's not much, but still I think it was a responsible thing to do, knowing that what I knew at the beginning of the day. Now at the end of the day, looking back, does it make me feel that I missed a big opportunity? Probably if I would have traded with a bigger capital, or probably with the capital that I traded, if I would have stayed in the trade a little longer, since let's say till 3 o'clock or 3:30, would the profit have not become much bigger? Of course, that feeling of missing out is there, which is just like the reality of being a trader. you will always have regret, right? You lose money, you will have regret. You make money, you will have regret. So that is basically the life of a trader. But I will continue to, stay cautious. I will continue to keep myself light till this enhanced intraday volatility settles down and market becomes more directional in nature. So maybe another few weeks from now. The good thing is that the union budget is around the corner. So a couple of weeks from now. So that is going to be definitely a big trigger. So with union budget, and then there is an RBI meeting right after that, and there is a Federal Reserve meeting. So I think we have enough triggers in this market in the next 2 weeks to give it a direction. So it's not that big of a deal. Maybe just waiting for 2 more weeks. To conserve your capital is always a smarter decision in the long run, right? So that's basically it, guys. It was a choppy day, didn't do much, and that's how the day and this is how the day ended. So I hope that you guys were also able to manage your risk and hopefully made some money.